I've been up and down the country and seen hundreds upon hundreds of properties over the last few years and spent thousands of hours researching the best deals that are out there. And based on everything that I saw and all of the data that I've found, there are 10 UK hotspots which are set to absolutely boom in 2025. So in this video, I'm going to show you where those areas are, the exact data that backs this up, and the 3 red flags that you need to check before investing, even if the deal sounds amazing. And by the way, if you want more detailed information on all of these locations, you can download the Property Investment Playbook through the link in the description. So starting at number 10 is somewhere interesting because house prices have actually dropped by 1.3% last year. So on the surface of it, it might not look like a great place to invest your money, but the university provides a steady stream of tenants and big employers are expanding into this location, which means that more young professionals are moving into the area who need high quality housing. The whole city is changing too. The historical areas maintain their appeal, but there are lots of new developments actually taking place. So there's a good mix of growth and stability that investors search for, but even more impressive, the average house price here sits around £195,000. That's £146,000 below the national average for England. So that combined with everything else mentioned means that I think Lincoln is an amazing place for anybody to start investing in property. I've worked with a number of clients buying properties in this area, particularly buying established HMOs in Lincoln because it's an Article 4 area. The Article 4 has already been in place for a while, so it's tricky to convert properties from a C3 to a C4, a normal residential house, to a HMO, which is why for me, I quite like to help people buy established HMOs in the area or focus on single lets in that market. Next up is a northern powerhouse. Property values here have jumped from £131,526 in 2014 to £207,501 in 2024, making it the highest growth performer among England's big 6 cities. The average house price now sits at £282,000 with rental yields around 4.94%. It's outperforming the national average of 4.75. The main thing driving this growth is the massive student population, with 136,000 people, with 30% of them choosing to stay after graduation. I was actually on the train coming back from London and I was sat next to a director of a huge international marketing agency, and he told me that he'd actually relocated out of London to get away from the London busyness, the prices, so that he could easily commute to London within 2 hours just once per week and buy a home that came with acres and acres of land. When I looked into it, it turns out 23,500 Londoners also relocated here between 2009 and 2015. But that shouldn't put you off, because properties here receive up to 30 inquiries each. So the city at number 9 is Leeds. And Savills have forecasted a 20.2% value increase by 2028 across North Yorkshire. So this growth might not be restricted to Leeds itself, but it definitely is going to impact it. And speaking of potential growth, our next area is actually a region that most investors overlook. And if any of you know my journey and my story, it was actually where I began investing in property. But here you can buy property for just under £200,000, which is miles below the national average of £291,000. In other words, you can enter the market with nearly £100,000 less capital required than other major UK cities. Now, I know cheap doesn't always equal good, but here the rental yields are about 6.22%, so a £200,000 investment could generate you £12,000 in annual rental income, significantly higher than what you'd achieve in most other UK regions. But it's not just the current numbers that make this interesting. The local council has just greenlit a massive £1.8 billion investment plan by 2027. So we're talking about over 4,300 new homes, transforming local education facilities, £63 million, creating new commercial spaces, 23 major transport projects improving connectivity. And what makes the location even more strategic is its position. You're investing just outside of Birmingham, in the UK's second largest city, meaning that you get tenants for the big city that want to access suburban prices. The region we're talking about is an area called the Black Country, And if you don't know where that is, I'll ask David, my editor, to highlight that on the map so you can see where I'm talking about. Savills have forecasted 26.4% capital growth by 2029 for the West Midlands as a whole. And up next is a town that the Sunday Times just named one of the best places to live in the country. The average property here costs about £266,000. And if you focus on flats or terraced houses, you're looking at a rental yield of about 5%. So what's driving this particular growth? Well, major employers like Barclays, the Hut Group and Roberts Bakery have made their home in this area, and they have some really high quality schools that attract families from outside the area, so the rental demand keeps on growing and keeps on increasing. It's also got massive regeneration plans, improved transport links and growing employment opportunities. So the area in number 7 is Northwich. It's set to do very, very well in 2025. And it's based in Cheshire, which for a lot of Cheshire, if you're looking at the areas around South Manchester, you're talking properties there can be worth millions. It's a very, very expensive part, but Northwich itself is much more affordable. So a great place for 2025 investors. Now, if you want big city connections without big city price tags, then our next location delivers on both of those. You can enter this market for about £277,000, 26% below the national average, yet your tenants can be in Birmingham in 30 minutes or in Manchester in under an hour. And although you're getting an amazing price, the market is far from flat. Property values here have jumped 23.8% in the last 5 years and a solid 5.4% growth in just March 2023. And for landlords, the numbers actually get even more interesting. Rental prices for apartments grew 5.3% last year, with the average property bringing in £705 per month. And my personal experience with this area is that if you convert a property into a HMO to a really high standard, then we're achieving room rents of between £675 and £700 per room per month. So number 6 is Stafford. And the reason for this big boom is that over 1,000 new businesses have opened here in just 3 years, joining 6,000 existing SMEs, which is a good sign for not only 2025, but for long term as well. Now we're moving into the top 5 here, so we're getting to the upper echelons of the locations that I have chosen. And this next area has secured a staggering £1 billion of transformation budget. You could be in Manchester city centre in just 6 minutes, which is everyone's dream, of course, including mine. It's home to one of Europe's largest student populations, and the best part is that 50% of them stay in this area after graduating, meaning that you've got a constant flow of young professionals looking for quality accommodation. You can enter the market for about £278,000 on average, but with property values already up 19% in the last 5 years, you're buying into a proven track record of growth. But it's the upcoming changes that make this place particularly good. That £1 billion of investment is actually delivering £42 million of transport interchange, the £45 million Red Rock Leisure Complex, and over 3,000 new homes. The area that we're talking about is Stockport, and one of the videos that I filmed recently with a friend of mine, if you've seen that video, is of a commercial building that he's converting into apartments in Stockport Centre. So if you haven't seen that, then make sure you check it out. But that same investor has managed to build up a portfolio of over 30 units in Stockport over the past few years, and he's done it by buying properties, adding a bit of value here and there, but sitting on those properties, watching the capital growth skyrocket, refinancing and going and buying more. He's been able to build up an incredible portfolio, and it's right next to the Peak District, minutes from Manchester. And as we head into 2025, Stockport is looking pretty flipping good. Number 4 is a city that is bridging the gap between north and south. Right now you can buy here for just £185,000, with Savills forecasting a 22.8% growth by 2028. That same property could be worth £227,000 at that point. This means you could be looking for a potential profit of £42,000 in just 4 years by buying the average property and sitting on it. The rental potential is actually pretty eye-catching, because if you buy a city centre property today, it could be generating a 6% yield. To put that in real terms, if you were to spend £185,000, then you could be generating £11,000 of annual rental income. Now, rents have already jumped 9.3% in the last year, pushing average monthly rental returns from 684 to 748. So if this trend continues, then your rental income could hit £14,000 annually within the next few years. But what actually makes these returns possible? You've got companies like Rolls-Royce and Toyota employing over 45,000 people. Then there's the student market. They have 34,000 students and 46% of graduates stay for work. So you've got a constant stream of educated, well-paid tenants that are entering and staying in the market. So the city that we're talking about is none other than Derby. For investors looking to tap into one of the UK's most productive cities with a 2030 master plan already reshaping its future, you can see why Derby earns its place in the top 4. At our number 3 spot, we have a city where rental properties are being snapped up within days of listing. A £200,000 investment here will get you a 2-bedroom apartment generating £834 in monthly rental income. That's £10,000 per year, and with rents rising 5 to 7% annually, this could hit £11,000 a year in 2025. And while areas like West Bridgeford are seeing property values hit £350,000 with 6 to 8% annual growth in prime locations, student areas like Lenton and Beeston can generate £2,000 or more monthly. And even today's market, the city's averaging 3% annual growth, consistently outperforming the national average. If you haven't guessed it already, I'm talking about Nottingham. So for investors looking to combine immediate rental returns with strong capital growth potential, this city should be at the top of your list. In city number 2, the average property costs less than half of London's £523,000 at just £234,000. It's been in and around the top UK growth charts for years, and on average, it's returning 6.5%. This means that £234,000 of investment would generate you £15,200 of annual rental income. And the growth story is even more compelling. Savills forecast a staggering 24.3% price increase by 2026, which means that £234,000 as an average could be £290,000 in just 2 years' time. The city's economy has exploded by 39% in the last decade to £78.7 billion, while the population is set to grow another 10% by 2025. The city we're talking about is none other than my hometown, Manchester. And with billions being poured into projects like the £1 billion airport transformation, it's positioning itself as the UK's strongest alternative to London. Just back in 2017, I used to drive into the city and see the cityscape of Manchester, and you'd immediately see the Beetham Tower. Fast forward to today, you can't even see the Beetham Tower. It just goes to show how much money they are ploughing into development into the city. So for a small-time property investor or developer, you should take a lot of comfort in this, because if you want to know where to invest, then just see where the big players are investing and putting their money, and just copy and paste what they do. As much as I love Manchester, the prices can sometimes be a high barrier to entry for people who actually want to get into the market. So there is one place in the UK that at the moment does beat it, and it pains me to say, but the average property price is £215,000. You can still buy a city centre property here for 150k. The returns here are hitting 8.18%. But it gets even better in the city centre. Some studio apartments are generating yields of 12.27%. Actually putting some figures to this, a £150,000 investment in the L1 postcode could generate £18,000 in annual rental income. That's £1,500 per month. But the city's changes are only just getting started. A massive £5.5 billion regeneration project is reshaping 2 kilometres of the waterfront, while the new £240 million Everton Stadium is set to boost the local economy when it opens in 2025. So you've obviously guessed it by now that I am talking about the city of Liverpool. Now, my final point before you rush into investing in any of these areas, there are 3 red flags that you need to watch out for. Number 1 is not every property in these cities will be a winner. Even in Liverpool with 12.27% yields, you need to look very closely at the specific postcodes that you're investing in and the property type, and just run your numbers properly. Second, regeneration plans can change. While cities like Manchester and Liverpool that I've mentioned have confirmed their projects, their timelines can shift. You still need to check the status of any development that's influencing your investment decision. Don't make a decision based on an unconfirmed development. And the third red flag is don't just chase the high yields. Some areas promising double-digit returns might actually have some hidden issues like oversupply or a declining tenant quality. In other words, even if the areas look amazing and any of these on these lists are a great place to invest, you need to make sure that your figures are spot on before you go ahead and invest in anything. So check out this video where I'm going to explain how to find and assess a really good property deal very, very quickly.